Hello, and welcome to the May 6th, 2026 meeting of the Governmental Accounting Standards Board. We had a great day yesterday at our board meeting, made a lot of good progress on revenue and expense recognition and the going concern severe financial stress project. Today, our only topic is the technical plan update. Hopefully vote for the second, third of 2026. With it, we have a number of papers, few proposals, some updates, a lot of good stuff. Alan, I'll turn it over to you to start us.
I appreciate it, Mr. Chair, and you're right. You have in front of you the proposal for the second, third of 2026 technical plan. Normally, I'd go through what's in paper one. Reality of most of what's in paper one is in the other 6 papers that you have in front of you today. It's been a while since the tech plan update had 7 papers, but I think that's a good thing because there's a lot of good things we're going to talk about today in terms of either project proposals or pre-agenda research proposals or project updates and actually some agenda requests from stakeholders. And so rather than me go through all that and steal the thunder from all the folks that are here to talk about it, I'll just stop with that and let the folks go through it. And obviously we'll talk about any questions at the end, and then we'll obviously talk about hopefully approving it at the end. We're going to do it, just so the board knows, we're going to do it in paper order number. So obviously this is issue 3 and there's paper 1, 2, 3, tech plan paper 1, cyber's paper 2. So we'll just do it in that order, stop at the end of each paper, go through the questions, let you ask questions, and we'll just keep going until we get all the way through paper 7. Does that make sense? Everybody okay with that? All right, so with that, we'll turn it over to Joe and our project proposal on cybersecurity risk disclosures.
All right, thank you, Alan. Good morning, everybody. So at the February 2026 meeting, project staff last met with the board to discuss the findings of the past year's research related to all things cybersecurity and provide the findings of that research in that final research memorandum. Since then, we've met with members of the GASB at its March 2026 meeting, where we provided them an update on the research, but then also sought their feedback on a draft project proposal, a project prospectus. And so we're back today to discuss that project prospectus to get the board's feedback as to whether they would want to add a project focused on information about cybersecurity to the tech plan. As I mentioned, we already discussed the findings of the research at the February board meeting in detail. So for the sake of time, I want to avoid rehashing too much of that discussion in detail. But for the sake of this discussion today, just want to note some high-level summary findings from the research. Again, that state and local governments are exposed to a wide range of rapidly evolving cybersecurity threats, and they can have a number of effects. Theft of resources, theft of data, disruptions, reputational harm, and that responding and recovering from these effects also have other costs that governments incur. A lot of the stakeholders that we interviewed as a part of this research discussed that external cybersecurity threat landscape in terms of when, not if, right? So it's maybe not so much a matter of, whether or not you're going to someday experience one, but really a matter of when. And in that when, not if environment, state and local governments have some general variability in the maturities of their cybersecurity postures. We did observe some limited disclosures, again, being provided by governments, but again, typically they were generally a little bit higher level and focused primarily on cybersecurity incidents and insurance. And one of the other findings from that research, kind of relevant for later part of our discussion this morning, is that we also found that the quantified impacts of cybersecurity incidents were generally relatively smaller in magnitude. But we also found that users are interested in information about certain aspects of cybersecurity. I would say primarily cybersecurity posture, right? Their ability to prepare for and respond to cybersecurity incidents, but then also information about incidents. But when we talked about incidents, it was often kind of indicated to us that the interest in an incident is because it provides another way to assess posture, right? It kind of lets you see the effectiveness of that posture in action. But also that the information that you might get either from posture or incident has a potential to result in a cybersecurity disclosure conflict. Essentially, that threat actors could use information the government provides about cybersecurity against that government to cause harm. And so it's something we heard from stakeholders we interviewed. It's something we heard from members of the Governmental Accounting Standards Advisory Council, both at its March 2025 and March 2026 meetings. And it's not just something we heard from preparers with concern about what their governments provide. It's also something we heard acknowledged by users about the potential of this conflict. And so for that reason, they also kind of indicated to us in the research that they also seek out information about cybersecurity and other forms. But again, they're looking for that information because they're interested in it, right? So that brings us to a potential project to establish financial reporting requirements for governments to provide information about cybersecurity in their financial statements. A potential project would consider information about cybersecurity be provided, developing authoritative definitions of relevant terminology to clarify the scope of that guidance, alternate guidance for governments that may be legally prohibited from providing such information, which we'll talk about in just a little bit here, and also the appropriate communication methods for providing that information. Because again, we saw users are interested in information because they have an awareness of some of these risks that are posed, that governments are exposed to, and because we observe some variability in the information governments provide, the inconsistency in which they provide it, and the limited level of detail they provide when doing so. However, no surprise, as we discussed at the February meeting and indicated when we met with GASB last month, as we saw in the research, there are also some challenges that come with developing such guidance. First and foremost would be cybersecurity disclosure conflicts. It's the most common concern we heard expressed by stakeholders during the research is the potential for this information to result in a government increasing its exposure to cybersecurity risks by providing information about cybersecurity. And again, something we heard from all sides. We talked to even users indicated, even though they want that information, they wouldn't want a government to provide it if it has a chance to cause harm. And the line between boilerplate language and language that might be potentially harmful is somewhat subjective, depending on who you're talking to and who's assessing it. So there might be an item of information that some individuals would say they don't find especially useful in their analysis, and some other stakeholders might look at that same bit of information and say that that's really too risky for their government to provide, and so it can vary. And concerns about disclosure conflicts, it wasn't really limited to a specific aspect of cybersecurity. I would say most commonly, I think probably the biggest area we would hear about it would be cybersecurity posture. But we also did hear about it for certain items about cybersecurity incidents, right? Information about a ransom that you might pay, and well, that could indicate that you pay ransoms. And so there's other concerns. It's not just limited to a certain aspect of cybersecurity. And as I mentioned a little bit ago, a potential project may have to consider alternate guidance for a government that's legally prohibited from providing information about cybersecurity, because there is a legislative aspect that we would have to considering, which is that many states have legislative exemptions to open public record acts specific to, and sometimes maybe at least alluding to, cybersecurity. It's not always explicit and itemizing every single thing that you can or cannot provide. Sometimes it's higher level language about not providing information that could jeopardize security. And so that could be open to interpretation by preparers regarding how to proceed when they're trying to determine whether or not they can legally provide such information. And so in that regard, a potential project on cybersecurity may need to incorporate alternate guidance for governments that determine they cannot legally provide potential information. This is something, we have an example of this already in existing guidance in Statement 77 for tax abatements. The question would be, how many governments would find in this regard for cybersecurity that they may have to provide such information. The second challenge, again, as noted earlier, the quantified impacts of cybersecurity incidents generally appears to be relatively smaller in magnitude. Even taking some of the larger incidents that were in the news in the past couple of years, the cost of those incidents, either reported in the news or reported by the governments, were often less than 1% of those governments' annual expenses, which we kind of use as a proxy for the size of the government. And so the project staff believes that this could result in disclosures by only a limited number of governments without developing additional clarifications related to the significance of qualitative aspects of cybersecurity incidents. However, that could have the offsetting effect of increasing the complexity of compiling such disclosures for preparers. Third would be a consideration of timeliness of the resulting information with regard to cybersecurity incidents. Due to the financial reporting lag in the government environment, it's possible that a note disclosure about a cybersecurity incident could be coming out 200 to over 500 days after its discovery. And as I mentioned, some users, a lot of users indicated that really what they're interested in when we hear about an incident is how it informs the effectiveness of the posture. However, it's quite likely that the government would address some form of issues with its posture in its response and recovery. And so a disclosure about an incident alone without providing information about posture might not be giving us timely information about, the government's posture without providing that update. But then that kind of brings us back to disclosure conflicts. And lastly, some scope and terminology items I would note, because of that limited relative magnitude of cybersecurity incidents, there may be some that view cyber-specific disclosures as being a little narrower of a scope within broader topics such as incidents within disasters or posture within other areas of risk management. And a potential project would also likely have to determine whether the scope should be limited to cyber-dependent incidents or more broadly including cyber-enabled incidents, ones that couldn't occur out of a government's IT system and ones that were enhanced or facilitated just by the existence of that environment. And so, lastly, projects would also have to consider, developing authoritative definitions of cybersecurity specific terminology that is used in practice. And I would note sometimes with variability depending on the source of a certain definition or the user's interpretation of that definition. So in conclusion, while the project staff acknowledges there's quite a bit of user interest in information about a government's cybersecurity posture and its insurance and about incidents that have affected the government, project staff believes that those potential challenges to provide financial reporting guidance for information about cybersecurity could diminish the intended outcomes of such a project. And so therefore, all things on balance, the project staff is ultimately not recommending moving forward with the addition of a project on information about cybersecurity to the current technical agenda. And that brings us to our only board discussion question for paper 2, which is, does the board believe that a project on information about cybersecurity should be added to the current technical agenda? And the project staff, again, does not recommend doing so.
Thanks, Joe. Board member responses to our question here and the proposal. Jackie.
I support the staff recommendation on this. I think there are a number of factors that would indicate that this probably isn't a plan for us or a topic for us for right now, at least. For one thing, it doesn't appear that in many cases it would be material or significant enough for, even if we did have a disclosure, that there would be a disclosure because they would decide that not material, don't need to do it. There already are a number of exceptions that would cause a number of governments not to disclose in the first place. There are a number of laws that are being considered that would further limit the number that disclose. And as a discussion with one of our fellow board members said, and if the government is looking not to disclose, they're pretty sure there'll be a number of bills presented to legislatures that would enhance the number that are not going to be disclosed. Finally, I question whether this is a financial accounting issue or whether this is a management issue and belongs. I don't necessarily see, other than reporting the expense, how it ties to the financial statements themselves. So I just don't believe that it's a topic for us to be moving forward on.
Thanks, Jackie. Robert?
I also support the staff recommendation. Besides the factors that Jackie cited, I think there would be a propensity, as staff indicated in the paper, that disclosures would end up having boilerplate information that would have very limited decision usefulness, even if we could draw a connection between financial statements and, besides the expenses. So I appreciate the extensive research and analysis that's been done. And I support the staff recommendation.
Thanks, Robert. Diane?
First, I want to compliment the staff. I think this was a very thorough paper, and I think you looked at it from all angles, and I think it really was very detailed and helped a lot. I actually talked to the staff about, well, so what if we did like a technical bulletin and said, okay, so if you're going to do disclosures, this is how you would do it, and these are the existing standards that would apply. And just to get something out there and not requiring anything. But after talking to the staff, that probably would not be a good idea either, because it may raise the level of scrutiny about people. Oh, well, they put this out, so should we do a disclosure? And it may push them to do a disclosure that really would not be appropriate. It might be too much information. I think that what Jackie said, what Robert said, this just runs the risk of disclosing too much. So I agree with the staff recommendation not to move forward.
Thanks, Diane. Jeff?
So, first of all, I can't deny the level of interest, right, that would be for us to do something, right? We've heard a lot about it. This is a topic that garners a great deal of attention. When you try to dig a little bit deeper, sometimes, then as to what you actually want, that's when it starts to get a little bit more complicated. So I sort of view this as a maze. And I'm at the start of the maze, and at the bottom of the maze, I'll call it effective disclosure. Right? And so try as I might to work my way through the maze, I was unable to get to the exit to the maze. Right? I would start and I would go down one path and I'd hit cybersecurity, cyber disclosure conflicts. So I'd turn around and I'd go another way. And then I'd hit materiality and whether it was really material. And then I'd turn around and then I hit the issue of, well, we're elevating risks because they're cyber, right? Is this fraud at its base and because it's cyber? And I turn around and then I hit measuring, and how do you measure mitigation and recovery costs that are going to be cyber? And so I get caught up there, but I keep trying. And I go to the ability and appropriateness for us to be defining what are, to me, pretty fundamental concepts, like what is a cyber incident? And I don't particularly think I want to do that. And then I try one more time and I hit confidentiality barriers. And so I finally decide that, try as I might, recognizing that the interest that exists, I can't get to a place where I think we can get an effective disclosure, right? So because of that, I agree with the staff recommendation.
Thanks, Jeff. Oh, well said. Carolyn?
I'm not going to chop Jeff's, but I do agree with the staff recommendation. And I have watched the evolution of this topic, and having served as an internal auditor who always went into an executive session to discuss IT issues, I do agree that there would be challenges with trying to have public disclosure. My state exempts security matters, including IT, from the sunshine laws. So there will be very little decision usefulness information that possibly could be provided. But similar to Diane, I really do appreciate the paper. It was very fact-based, and I thought a very thorough analysis. So with all that said, I do agree with the staff recommendation.
Thanks, Carolyn. Chris?
I also agree with the staff recommendation and echo the comments on the paper. One thing that the paper did is that it was comprehensive and supporting and making me comfortable supporting something that says we don't want to move forward with a project that, some say is very important, right? And it lays out all the reasons, as my fellow board members have mentioned. Joe mentioned security posture several times in his dialogue. And I think that's just really important. And it fundamentally, between that and what Jackie was talking about with at its core is this financial in nature. No, at its core, it's management security posture and understanding that making that publicly available and that being a roadmap to the security and infrastructure of an organization, potentially on what we would choose to disclose, is problematic. And then, again, as everybody mentioned, on if they don't want to disclose, they won't disclose, and there are laws and everything that can get you beyond that. Last, I think that it's important along the lines of the financial statements to think about ways that it actually impacts the financial statements, these types of issues. While what we found is that generally they weren't material, maybe they could be. And one thing that I think we did an excellent job on with, I think it was ESG, Joel, was pulling together, hey, if this is how we address, we as the GASB address it right now, right? So we think about it from the financial statement impact, whether it's a contingency that might exist in year end. Are we going to pay it? Are we not going to pay it? What's the probability? And what's the underlying liability, if you will, whether, however it comes about, that is going to be there. And in the same way, subsequent events, right? Hey, there was a big attack and it significantly knocked out our payment system for XYZ, and this is why it's important. So I think that there might be other ways to show how we address it to a certain degree. And while it might not make everybody happy and understanding that security posture, I also believe that that's not our place to help people understand the security posture of a government.
Thanks, Chris. So I'm probably going to be a little repetitive of some of my fellow board members, but I agree with the staff recommendation. I also agree you summarized the issues really well. And this is an important risk. At times, a couple of years ago, the GASAC had this rated highest or second highest in their prioritization. Now it did fall this past year after they kind of heard our research results. And so it was not nearly as high. It was much lower, I think, because a lot of people on the GASAC seem to acknowledge that there's really not much we can do here for the reasons that we've talked about today and the team's research has shown. But the risk is growing, right? It's becoming it's ever present. It's evolving with advanced technologies, but I mean, the base of the risk is kind of the same. And this inherent risk of disclosure conflicts, I don't know if that's a term we coined, Joe, or what, but I like using that term, would increase. And that risk is very high with almost any path we go down, as kind of Jeff pointed out. And in almost any path you go down that doesn't increase that disclosure conflict risk, the result would be boilerplate information that isn't helpful to anybody. So kind of why cause that? The GASAC did seem to acknowledge that. Even some of the users on GASAC kind of acknowledge this risk, although some still want us to try to find the right path. But we tried. I did have hope at one point that kind of recovery plans as opposed to prevention might be a path forward. But even like Jeff, you go down that path and you start thinking about it. Well, even disclosing those prevention plans helps a bad actor figure out how to differently attack and still. So even that is increasing risks. I did find it interesting, the kind of materiality or maybe lack thereof of some of these. I think there's some arguments about how broad, and the papers have brought this out too, not just reputational risk, but the systems, they're more cost than just the ransomware or something specific to that attack in your recovery. But how do you define what that is? That will be hard. Maybe we could get there on that, but it was at least interesting to know that even it's not terribly material. So while I understand the user's desires for this information, I understand the importance of this issue, I agree with our recommendation of no standard setting project. And I guess my hope is that there are just other information avenues in some way, shape, or form where information about this kind of area gets its way to the users, whether that's kind of CISA reporting, continuing or getting better and at least providing users with more timely information about broad cyber risks to state and local governments. Now, that's not targeted specifically at any government, but they at least users can kind of understand how the overall environment is being affected in a closer to real-time basis. Or like rating agencies often are proxies, and sometimes rating agencies might have access to some of this information. While they're not going to disclose it specifically about a government, everybody that's using a rating agency's rating by proxy kind of has some, there's been an inclusion in the rating agency's overall assessment. What kind of risks is that government exposed to? And so they're getting that as a way through that proxy of the rating agency information for users to make decisions. So not cyber specific, but at least it's kind of in there somehow. So I guess my hope is that users are kind of sort of getting some of the benefits of cyber information, even though the external financial report isn't the right place for it.
I think that takes care of your paper, and I appreciate that, and I appreciate the comments. Obviously, this is an example where sometimes we do a pre-agenda research, and the value might be in the board deciding it's not a project. Sometimes the value is in the board deciding there is a project. So we appreciate that.
So Alan, before
Yes, sir.
we drop this, can I just ask, what in your mind is sort of next steps with this? Because part of me feels like it's an important topic. There's one that there's a great deal of interest. I heard a couple of different avenues mentioned for maintaining awareness, right? Because it doesn't feel right for us to say, well, we looked at it and now we're just dropping it. I don't know if that's keeping it as a monitoring thing, because clearly it's evolving in lots of different ways. So do we keep it as a monitoring project? Do we do a staff paper talking about some of the things the staff talked about, like there's standards that address some of this stuff along the lines of what we did with ESG? Do we do a technical bulletin like Diane mentioned, right? Like, I'm not sure what the right answer is, and I'm not advocating for any of the above. I'm just sort of mentioning it sort of feels like for us to go to stakeholders and saying, yeah, we just dropped it. There's nothing there. And clearly they're going to say, well, there's something there, right? Like, we know there's something, and we know there's something there. We're just saying we can't find the pathway right, to get to that essential disclosures, right? That doesn't mean there's nothing there. So I just wanted to throw that out for consideration.
I think there's a lot to think during that. The one thing I would say, as far as the TV is concerned, to even have a TV, no different than you have an implementation guide, we would need something level A to hang it on. And I don't think in this case we would have that. So I'm not sure the TV is really an avenue we could probably pursue down the path. Now, whether or not there's a monitoring project or something like that, that's probably, I think Joel might have been speaking to that. But while the TV is something to talk about, I think in this case, we wouldn't have anything level to hang it on to get there. So I don't know that's really an avenue, though.
Jackie.
I want to follow up on what Jeff said. When I first came onto the board, one of the things Joel and I talked about was how important I thought that our doing and looking at cybersecurity was, because I thought it was really a big issue and needed to be addressed. Your research and your papers have convinced me we can't do it. But so kudos to you. You flipped me on that one, I think. But I do agree with Jeff. I think that it's something that as board, we should be cognizant of, because we know how important it is to stakeholders and to the financial viability of the governments themselves. So I don't know if it's just a monitoring activity, so we're aware of what is going on and constantly apprised of the situation that our governments are facing. But yes, I'm like Jeff. I don't want us to see it go away completely, because it is something that's top of mind for many of the users and stakeholders of governments.
Diane.
I just want to clarify what my thought was on the technical bulletin, because I understand we're not issuing standards in a technical bulletin. But if you go back to the first research paper we had, there was a whole section on location of these disclosures. And I thought, well, if we did something like just say, okay, So if you're going to disclose, say, a liability that you might have because of the data breach, then that would qualify under this statement, and you would put it here for a disclosure, and so on. You know, this might be more appropriate in an MD&A, or this might be appropriate under contingencies. So just kind of laying it out, the existing disclosures that are happening, and pull them all together so that people have a little bit of guidance instead of just haphazard all over the place looking for those disclosures. That's all I had in mind. But I thought in just doing something like that, at least we're addressing, okay, look, we looked at this cybersecurity. This is about as far as we can go with it, but we're doing something. That was my thought. And I thought staff brought up a really good point that if we do that, it raises the awareness of governments that, oh, gee, maybe we're supposed to do a disclosure and we're not. And then we end up, with too much information out there. But I don't know. I think there's a balance, but I think it's something that could actually be considered.
Thanks to all of you. We'll continue to think about that. I would say I don't believe we're getting technical inquiries on governments asking about this kind of thing, right? And so that tends to be the source of implementation guides or things like a technical bulletin. But it's something we'll pay attention to. And on the monitoring, for me, the monitoring agenda is something that we're actively working on. And we kind of have this procedure. If we've looked at something and the board has decided not to do standard setting, we kind of step back from it for at least a little while. I would like to do that here, just because while yes, there are more advanced technologies, the core issue, it probably isn't going to change, at least anytime soon. And we always have the opportunity that we'll talk to GASAC 3 times a year and we deal with emerging issues. And if they continue to bring it up, then maybe we'll put it back on monitoring at some point at that time. I just wouldn't want it to go automatically onto it right now, because we just addressed it. And I don't think it's going to change the issues for why we aren't taking it on. I don't think are going to change anytime real soon. I do think there's something to, it's an important issue. Users really asked about it. How do we communicate that? Because, oftentimes in a standard setting project, we have the basis where we put out publicly, we explain why we didn't do something. I don't exactly know what to do here. I can tell you one thing we are planning is to have a podcast episode with Joe and maybe me, a board member, probably me, summarizing what we did here. Joe's going to summarize the research. I can summarize kind of the board's, why the board decided what it decided, at least from my perspectives. And so we're at least trying to, and at conferences, at GASAC meeting, they've kind of already heard at least most of the rationale. So I think we're trying to communicate that to the users, and we'll keep trying to do that, because I don't want to seem like we just dropped it and we didn't tell you why or anything. Obviously this is a public meeting, they can watch it, but I do think we'll do something to try to communicate that to them. And we'll, if we continue to hear about it, then we'll continue to think on how does that manifest in the agenda, given that we just spent all this time and came to this conclusion. But
I think putting forward some of the research that the team has done would be a really good idea, because obviously many of us felt that there would be a project coming out of this and changed our mind based on the research that the staff presented. So I think it's a good basis for people to read and understand the complexity of the issue and why it would be so difficult to move forward.
Yeah, I think we can do that. I think we can also, I think Lisa might look at me right now. I think it's also probably not have a slide or two in our GASB update deck. It just explains this research project, what the research project did, what the research project found, and what the conclusion was. I think we can put 2 or 3 slides on that. And then so when we're doing all these GASB updates, one of the things we can talk about is, here's an example where we did some research and it didn't turn into a project, which I think is important to talk about, but this would be a good one to do that with, and 2 or 3 slides like that, listing listing some of the things that Joe mentioned in terms of why and what sort of constraints as to why we didn't go forward. I think would be fair and good.
And I do think our research memorandum are on the website. Yeah. So I would expect this, not the project proposal, but the research that Joe presented would go on the website. So it will be out there.
people don't I think your podcast is like better, is a good idea. People are more likely to see that than go out and look for it.
And that maybe our conference slides can direct them to the research memo too. Okay. Anybody else on that topic? Thank you. Appreciate all the feedback.
Thank you, sir. So we'll transition. Lisa, you're up.
Excellent. Thank you very much, Mr. Director, and good morning, everybody. Thank you for the time this morning for our project team to give you an update on the pre-agenda research that we've been conducting on the pension and OPEB note disclosures and taking them through the lens of the concepts that are within Concept Statement 7. And of course, this was important because the pension and the OPEB standards had been issued prior to the board issuing Concept Statement number 7. So put on your essentiality lens. We're about to take you through the camera of what we've done thus far with this pre-agenda research. If I can advance the slides. All right. So, this was kind of a monumental, overwhelming task when we first started thinking about it, as I'm sure you can imagine, with the number of disclosures related to pensions and OPEB, the employer side, the plan side. So we had to find a way to disaggregate the work that we were going to do into digestible pieces. We know our user groups are very, very busy. And so when we had their attention and their time, we wanted to be very focused and very mindful of that. So you can see our research activities, we broke down into 4 key stages. The first one was a survey that we did, a very quick, short, nice, neat little survey where we basically were asking them, hey, do you use this information? Do you use information in the notes related to pensions and OPEB? And it really was somewhat quite that brief. At that point, we also tried to hook them. And what I mean by that is we ended that survey by saying, hey, we know you've got some interest in this. If you said yes, that you use this information, would you be willing to further participate in our research activities related to this effort? So that's kind of where we populated our group of users that we were going to continue down this journey with us to wrap up this research. Now, the second phase was where we did the cataloging. This sounds pretty easy, right? You just identify all the disclosures in our authoritative guidance related to pensions and OPEB. But when you think about that guidance, right, whether it's the different type of plan, is it trusted, is it non-trusted, the non-employer contributing entities, the special funding situations, all of those details for pensions and for OPEB, and the fact that there's a lot of overlap in those disclosures, not only between pensions and OPEB, but also based on all those different characteristics. This was a monumental task where we were really trying to come up with the unique disclosures, again, in a digestible way, so that we could go to our users and ask them, okay, what specifically do you use? And not pie in the sky, oh yeah, we use that for context, but what do you use to make decisions or assessments of accountability, which flowed into the next step, which was the second survey that we administered to users, again, using what we had learned from the cataloging, how we had created these digestible categories and subcategories is what you're going to see we called them, to be able to really engage them to get at, hey, what is it that you use? The last stage, which we're just starting on now, is going to be the interview stage. So this is where we're going to roll up our sleeves. We're going to really, for 1 hour, have the attention of these users that have come on this journey with us to say, okay, you've told us that you use this subcategory of information, but now we're going to break that down into the individual information items, because that's what Concept Statement 7 says, right? They have to use these individual information items in a meaningful way in their analyses or that lead to their decisions or their assessments. So that's the phase that we're getting ready to embark upon now. And of course, when you look at this, right, it's pretty interesting. We all know Concept 7 quite well. So when you look at Survey 1 and Survey 2, this whole do you use, what do you use, that's really aiming to get at breadth or depth, right? Which is our first criteria for essentiality in concept statement 7. And then this final stage, how do you use, is really aimed at getting at that second criteria in concept statement 7, which is, hey, you might tell me you use it, but is that really a meaningful way that leads to a decision or an assessment of accountability that you're making? So kind of crafted in what the team thinks is a pretty awesome way. And so when you think about this, we have been on this journey. You kind of let us loose and put this on the pre-agenda research almost a year ago. So we thought it would be pretty important to show you, what is it that we've been doing over this last 11 months, kind of since you set us loose on this. You can see the cataloging kind of overarching. That's been going on at the same time that we were doing the surveys, both Survey 1 and Survey 2, not only designing those instruments, but then also administering them and then analyzing the results of those surveys. Because as I told you, right, they kind of bleed into one another. What we learned from 1 bleeds into 2. What we learned in 2 is really going to bleed into this interview process. And we really customized, if you will, the second survey, and we're customizing the interviews based on what each of those users actually told us in those prior stages of the research. So that's taking a little bit more time because it's not a canned protocol or survey that we basically used for everybody. And then you can see sort of this last overarching piece, which we've been doing as we've gone along, summarizing the various pieces, which is the report writing, where in December of 26, we will come before the board and we will present to you the final results of all of this research and what we've learned to inform the board as to whether or not you want to take action and put a project related to this on the technical agenda. So with that, I'm going to turn it over to Paul. Paul's going to take you through the results of that first survey, which, remember, this was really aimed at getting at, do you use the information in the notes to the financial statements?
Thank you, Lisa. In our first survey, the project staff aimed at answering the following question. Do you, being the financial statement users, use information in the notes to financial statements? Although the project staff has collected and analyzed the data from the survey, no decisions have been made or will be made about these results until all research activities are completed. After distributing the survey, the project staff received 124 responses. However, 72 respondents were filtered out of the results, which included 33 that were either not a user or not interested in governments, 21 that were either not interested in post-employment benefit information or notes to financial statements, and 18 that did not make a decision or assess the accountability in their use of PEP information. Of the 52 users that remained, they were classified by their primary role in their use of government financial reports. Users were classified as a bond market participant or analyst, an academic, a legislative analyst, a research analyst, or another user. The examples of other users include 1 attorney, 3 citizens, 1 employee representative, and 1 statistician. Next, when analyzing the types of PEP information used in their use of government financial reports, 49 of the 52 users indicated their use of both pension and other post-employment benefit information. When breaking apart this PEP information in government employer financial reports, it is most evident that the notes to financial statements are utilized the most for both pension and OPEB information. More so, although not as significant, the same trend can be seen within planned financial reports, as notes to financial statements are utilized over basic financial statements and require supplementary information. It is important to note that all 52 users answered the question associated with slide 8 and/or 9, but not every one of them uses employer and/or plan financial statements. Some only use plan, while others only use employer. That same reasoning applies to whether they use those financial statements for pensions and/or OPEBs. Moving on and thinking about the information needed to draft the second survey, It was important to ask users about their reasoning for using PEB information within the notes to financial statements. The two reasons highlighted in orange indicate that those responses were not direct decisions or an assessment of accountability, and instead were contextual in nature. The other three reasons were determined to be actual decisions or assessments of accountability, and those decisions include: 1, making investment decisions or assisting in the investment decisions of others; 2, making or recommending legislative decisions related to the funding or oversight of the employer government; and 3, assessing the accountability of the employer government or plan. Finally, out of the 52 users that answered the first survey, 29 indicated their willingness to participate in the second survey.
Thank you, Paul. And so it was those 29 that we then used in the second survey. But before we talk about that second survey, we're going to talk a little bit about the cataloging process that we went through to identify those unique disclosures, as I had mentioned up front. And I'm going to turn it over to Danielle, who's going to take us through that process.
Thank you, Lisa. All right, so this slide visualizes the cataloging process, which we developed with two objectives in mind. The first objective was to identify the items of information as suggested in paragraph 13 of concept statement 7, which partially states the determination of whether information is essential should relate to individual information items. So to achieve this objective, we began by extracting the pension and OPEB subparagraphs from the 12 codification sections, which are listed on the top. And as you can see, 197 subparagraphs were extracted for pensions and 218 were extracted for OPEBs. During step 2, we reviewed those subparagraphs and identified the individual information items required to be disclosed. And as you can see, 526 information items were identified for pensions and 573 were identified for OPEB. The second objective of the cataloging process was to organize the information in a manner that facilitated the development of the two surveys of financial statement users, as well as prepare the project staff for the upcoming interviews with a subset of those users. So to achieve this, we took the information items identified in step 2 and categorized them based on their PEB characteristics. So for example, whether an information item is applicable to pension or OPEB and whether it is required to be disclosed in the employer financial statements or the plan financial statements. We also organized the information into categories and subcategories, as Lisa mentioned, which we'll see on the next slide. So once all the information items were categorized, we worked to collapse the information items into distinct disclosures, first within each codification section, which is step 4, and then across the codification sections, which is step 5. And step 4 and 5 were necessary to address the multidimensionality of the PEB guidance so that each item of information appears only once in the catalog. So as an example, the requirement to disclose the name of the pension plan appears in 5 subparagraphs within P20. One subparagraph establishes the requirement for the single and agent multiple employer plans, one for cost-sharing multiple employer plans that have certain characteristics, one for cost-sharing multiple employer plans that do not have those characteristics, one for the non-employer contributing entity that recognizes a substantial portion of the pension liability, and one for the non-employer contributing entity that recognizes a less than substantial. So during step 4, these 5 paragraphs were collapsed into one single distinct information item, the name of the pension plan. And repeating this process for all 12 codification sections reduced the number of information items from 526 to 228 for pensions and from 573 to 248 for OPEBs. So during step 5, the requirement to disclose the name of the pension plan was collapsed with the requirement to disclose the name of the OPEB plan. And this resulted in one unique information item, the name of the pension or OPEB plan. And as you can see at the bottom of the slide, this resulted in 119 unique information items.
Can I ask a question?
Absolutely.
Because this was a slide so it was helpful, your description, Danielle, but I just want to understand, because I was struck by when I got to the bottom of this and right how it got skinnied down to 119. I'm like, how'd they do that, right? So you just explained and gave an example of that with a plan name, which makes sense to me. And you said each item of information appears only once in the catalog, right? Is it always the case, like plan name sounds logical to me, right? Like, okay, plan name is a fact, is a piece of information, and in the context of which I get it in these different disclosures, it's still the plan name, right? Are there other items of information, though, that depending on the context in which they are asked for, actually have a different purpose, right? In other words, like I'm putting this item of information in this disclosure because I'm seeking this relevance for the user, whereas that same item of information in that disclosure is different. You understand what I'm saying? I'm just wondering, are we losing anything boiling it down to 119 at the bottom when we're going forth to users and saying, hey, do you use this? And I'm giving you that item of information, which really may have different purposes depending on, I'm not saying I know that to be the case. I'm asking, is that the case?
Jeff, so one of the things that we did ask to sort of get at that was, does your use of this information change based on different characteristics of the plan? So in other words, if you're telling me you use the name, what she gave here as an example, which was the name of the plan, does that change depending on whether it's a single or an agent or a cost sharing? Does that change versus if it's trusted or if it's non-trusted? So we were aiming at getting at that because those are the nuances. It's those different characteristics that create the nuances that I think could lead to the different purpose of the use of the information that you're getting at. So yes, to directly answer your question, I believe that we definitely have done that so that now, and if we haven't, we're going to do it in the interview process because we're going to flush that out as well.
I think that's right. That seems important to me because
Correct.
you wouldn't want to just go to the user with one purpose of this information, right? And get a yes, no from them on that. Whereas there's these other, because you didn't ask them about these other uses of that same bit of information that you might lose. You might end up throwing out those other 4 purposes. But if, like you're saying, you're going to go to them with the example of plans, like, what about this type of plan? What about that type of plan?
Right.
What about that type of, and whatever that information item is, what about in this context? What about in that context? And as long as we're able to dig there, then I'd feel better about the results we would get.
Understood. Yeah. And that is something that we've actually already done in the second survey. That was kind of the last question. One of the last questions that we asked in that second survey was, hey, okay, you've told us now what you use. Does that change based on these different characteristics? Great question, though.
Can I ask a question?
Sure.
I think different than what just asked. Mine's a little more, I'm trying to understand this process, and it's step 5, I think, is where I'm getting hung up. If I understood it correctly, like name of plan, as we go down the pensions, in step 4, name of plan is one of the 228.
It could be several.
Go ahead.
It would be 6 because it's required in all 6 of those codification sections. So the
Right.
step 4 was just collapsing them within P20, within P21.
So in step 2 of the 526, that's in there 6 times.
Mhm.
But in step 4, the 228, it's in there 1 time.
No, it's still 6.
Oh,
It's
then what was step 2 to 4?
Step 2 was just identifying the information items within the subparagraphs.
Just a full out, let's get an inventory of them.
Okay. And so we went from 526 to 228. What did we do to reduce that?
To the 119? Is that what you're asking?
I'm asking
Oh,
for the
you're
first
asking from the
one.
526 to the 228? So go ahead, Daniel. No, go ahead.
So the 526 in step 2, that's going to have, so we have, I know at least for P20 and P22, we have those 5 different PEB characteristics. You have the single and agent, the cost sharing, the 2 different cost sharings, and the 2 different NECs. So it's actually 30 in the 526, and it's reduced down to 6.
Okay. I got,
It kind of
understand.
dovetails
I
with what
understand
Jeff
all of
was
it now.
asking, those
Well,
characteristics.
I didn't know. I wasn't sure. I understand all of it now. I misunderstood them. Thank you.
So I have a question. So since you're rolling it all together and like you mentioned the example of the plan name. So what if they're using something on the OPEB side, but not on the pension side? How do you differentiate that?
So we did ask them that. You're gonna also see in the second survey results where we asked them when we got more specific about the subcategories of information, we asked them, do you use this for pension, for OPEB, or for both, or for neither? Because there are some instances where they use the information for just one.
All right, so this slide shows how we organize the 119 information items into the 9 categories and 30 subcategories. And organizing the information in this way, as Lisa mentioned, allowed us to present the information to the financial statement users in a more digestible way. And these categories and subcategories served as the basis for development of the second survey, which Lisa will go over.
Excellent. Yeah, so the second survey really aimed at those subcategories that you see there. So now the interview process that we're going to conduct will then expand upon those to ask them about all the 119 individual pieces. So, but before we talk about that, let's talk about the second survey, because this was where we asked, okay, what information do you use, as I said, based on those subcategories of information? You can see we wanted to show you the participation. So the first survey, as you saw, we had 52 people that participated. And as I told you, the very last question of survey 1 was, hey, will you come on this journey with us, or does it end here for you? And 29 of them said, yeah, we'd be willing to continue participating in these research efforts. So that was a pretty good turnout. We had, just over 60%. We were pretty pleased with that. And then out of those 29, we actually had 21 that lived up to their expectations, that completed that second survey. So we're looking at about a 75% participation rate there. So I know this is a really busy slide, but this one gets us really excited because it kind of tells the whole story of what they told us for the type of information that they do in fact use, right? And you can see the way we broke it down based on those subcategories. The orangey kind of bar line, that means they told us, hey, we use this information for both pensions and OPEB. So that really stands out, because in the majority of the cases, to Diane's prior question, in the majority of the cases, they were telling us, yes, no big surprise for us, but we use this information for both pension and OPEB. The two, of course, that stick out, AMM and the healthcare sensitivity analysis, of course, those are not applicable to pensions. So that's why you don't see any orange bar there, and the drops at the very bottom, of course, that only relates to pensions. So you don't see the orange bar there. You're seeing it just for either pensions or OPEBs in both cases. But so for us, when we look at this, we go, wow, what does the neither look like? Where are they telling us that, hey, we don't use this information either for pensions or for OPEB? Again, the big ones there that kind of stand out are AMM and the healthcare sensitivity analysis, based on what you heard from our PIR update, right, on OPEB. No big surprise here. The two projects kind of dovetail in some ways. And then again, also with the drops, the neither there is a little bit larger. But in the majority of the cases, users were telling us we use this information for both pension or OPEB. So then we got at, okay, well, let's talk about location, because you can get this information either in the plan statements or you can get it in the employer statements. So this next slide here is really looking at the location of the information for the employer side of this. Is employer or plan for pensions only. So this one is focusing in just on pensions, and you can see where this displays whether they get that information or look for that information in the notes to the plan statements, the notes to the employer statements, or in both cases. It's important to note here that the number for each line is a little bit different, and that's because they only answered this question if they had an interest in information for pensions or for OPEB. So that's why the N isn't consistently 21 here in all cases like you saw on the previous slide. And it'll be the same way on the next slide for the OPEB only information. But again, here, you know, both in many cases for some of the big stuff as you would expect, of course, the plan information from the plan financials, that's only going to be in the notes to the plans. And there are some other requirements that you see there that are only in the notes to the employer statements. That's because that's where it's only the only place it's applicable. So that's why you see just the blue bar line there. The next slide here does the same thing for OPEBs. And pretty similar in the way the results came out here for pensions and for OPEBs.
So Lisa,
Yes.
just so I understand this slide. So for example, plan description, the top one where it's got 3 different places. So am I to read this like there's 20 pieces of information? And
Nope.
where the user is getting those pieces of information are these places, or how
So
am I to
what this is
interpret
telling you, Jeff, is that there are 7 users in our survey population that said they get plan description information in both the plan and the employer financial statements. There are 10 of those users that said, for this information on plan description, we only go to the employer, the notes of the employer statements. And there were 3 that said we only go to the notes to the plan statements. So those bars and those numbers represent the number of users. And again, the reason why it's not consistently all 21 is because they were only directed in the survey instrument to answer this question if they in fact said that we have an interest in this type of information.
Gotcha. Okay, thanks.
Anything else before we talk about what we're about to embark on? All right. So as I said up front, we're about to embark on the user interviews, where we're going to really dive into trying to get some information to inform meaningful effect. So this is where we're going to ask them, how do you use this information in the notes? How does that lead to a decision or an assessment of accountability? And you can see here what we're doing right now is we're developing the customized interview protocols and the preparatory materials based on what they told us in the second survey and in the first survey. We're also a little ahead of the game here because we've already scheduled 17 of the 21 interviews that we're going to conduct. So 4 more that I'm really beating down hard to try to get that on our schedule. And then we will conduct all of those interviews in July. And then from July through September, our plan is to really look at all of this holistically and summarize that interview feedback. As you can see, we've already summarized the results from Survey 1 and Survey 2. And then at the very end of the year, we will begin the process of putting it all into a final research memorandum that our intention is to present to the board, if all goes according to plan, at the December 2026 meeting. And that's what we have for you today. Are there any other questions around anything that we're doing here?
The only thing I'll mention, probably be no surprise to you, Lisa, right, is that when I think about it as a survey thing, and I say 21 people, I would be like, I don't know that I want to necessarily be making major decisions off the opinions of 21 people. However, depending on the nature of those people, right, who they are, what their engagement is with this particular topic, like, I'm just not there because I got nothing else to do and I'm willing to do a GASB thing, versus who those people are. And then the fact that you are going to delve deeper within the interview and how important the interview is to fleshing out what those bar lines are, what those results we think we're hearing from you, whether those are actually the results that we should be taking away. I think the interview process is going to be super important in my view.
Yeah, that's a great question, Jeff. And honestly, we kind of knew that question would probably be asked. What I can tell you, and you know better than anybody, we can't attribute any of our findings right to people or organizations. But we feel like we have a really good span of users in the work. But I'm also gonna ask Tammy to address your concern more directly.
You know, every time we get ready to do outreach, there is always that question of what is the number that you need to reach. And I think for purposes of something like this, number one, you know, the response rate that we got on survey one was good and comparable to what we've gotten in other user surveys, inherently hard to engage with them. But I will say that, you know, of the 21, as Lisa mentioned, although we assure them in the survey process that the results and their information won't be attributed to them or their organization, that there is good representation across the different stakeholder types within the bond market, you know, various types of bond market professionals. And the qualitative research that we'll do in the interviews doesn't necessarily depend on statistical inference that would mean that a large number is necessarily warranted or required. So I think, and then there's also the constraint around it of how many of these can you do and do effectively. You know, we'd love to do about 20 and do them really well. And if we get enough information to suggest that we feel comfortable making inferences about the way other users would use that information, then I think we'll know at that point that we were good. But I think the number, it feels okay to me, although it's not an exact science.
Yeah, no, I recognize that. And I guess that's also part of this exercise you'll be doing, right? And I think that's important, at least for me to hear, like you're not going to look at the results necessarily in a vacuum, but does it make sense with what else you have encountered and understood in this whatever journey you've been on? Is that consistent with what I'm hearing? Like it's not incongruous, like these people are telling me one thing, but I hear elsewhere that this is important or whatever. Like if it's a consistent theme, then I think I would feel better about, you know, taking one path versus the other, right?
I will also mention that the interviews and working on the instrument for how we go about doing the interviews, we are working to make that much less of a checklist of which of these things to use rather than talk to me about the way that you use this type of information. Now that puts the onus on us to make the inferences about where those are slotted in, but it also allows us to assess better if we think that that information, the way they say they use it, should be comparable to other people in their industry or other types of users.
Anybody else? Thanks, Lisa. and
Thank you.
team.
More to come in December.
Excellent.
So we will transition now to the next two topics. We're going to talk about our proposals for pre-agenda research, and we'll start with Emily with the first one.
Thanks, Alan. And we will stay in the vein of post-employment benefits because we have a pre-agenda research proposal related to deferrals, pension and OPEB deferrals. And as you all know, GASAC did receive a draft research proposal in their March meeting. So we'll talk about their feedback on that in a bit. What you see in front of you is that draft plus some additional sections that go into the official proposal. So the objective of this research would be to analyze the degree to which pension and OPEB expense would be different if changes in the pension or OPEB liability that are currently reported as deferred outflows or deferred inflows and then recognized an expense over time were instead recognized an expense immediately when those changes occur. This analysis would be intended to support a potential future evaluation by the board as to whether there could be any type of practical expedient to the existing approach for recognizing changes, with the objective of that practical expedience reducing costs to preparers and auditors without significant changes to the information that's currently provided to users about interperiod equity. So as a little bit of background and taking a step back, statements 68, 73, and 75 establish the requirements for post-employment benefits and establish how changes in the pension and OPEB liabilities are recognized. Those standards require that a portion of certain changes in the liability be reported as deferrals when the change occurs, and then recognized in expense over future periods. So the changes specifically that we're talking about are twofold. We've got the changes in the total liability, so total pension liability, total OPEB liability. Those include differences between expected and actual experience with regard to economic or demographic factors, so experience gains and losses, and changes of assumptions about future economic or demographic factors or other inputs. Those two types of changes currently are recognized in expense over the average expected remaining service lives of employees that are provided with benefits through the plan. So beginning in the current period and then extending over that length of time. Changes in the net pension or OPEB liability resulting from changes in the plan's fiduciary net position that result in deferrals being reported include the differences between projected and actual investment earnings. So investment gains and losses. Those are recognized in expense over a closed 5-year period beginning in the current period. There's also some entity-specific changes that result in deferrals, and those include changes in proportion and differences between actual contributions made by the entity during the measurement period and the entity's proportionate share of total contributions from all entities. Those two types of changes are also recognized over the average expected remaining service life of all employees provided with benefits through the plan. Those two types of entity-specific changes affect cost-sharing employers, entities in special funding situations, and primary governments and component units that provide benefits through the same single employer plan. The approach that led to this recognition model was established after extensive due process and deliberations in which the board considered views both that changes should be recognized over a longer period of time, as well as views that changes should be recognized immediately. And then also throughout the development of these standards and through the due process, which included a field test, the board considered the costs and complexity of the various approaches and ultimately decided on the approach that was just described. So reasons for this proposed pre-agenda research primarily stem from stakeholder feedback regarding the cost and complexity. Our post-implementation review activities have identified cost and complexity for preparers and auditors associated with the existing recognition approach, and the difficulty related to the topic of pension or OPEB deferrals has ranked in the top among 7 or 8 topics. Lisa and Tammy provided that update on the post-implementation review activities at the last meeting. We also heard from our GASAC members in March, and this topic specifically, the proposed pre-agenda research topic that's described, ranked 6th in the GASAC's most recent prioritization. And regarding this proposal, some members were supportive of the proposed research. They believe that it is responsive to the PIR results. Some members also would support, or instead would support, a more holistic look at deferrals, and specifically looking at re-examining statements 63 and 65 instead of taking the more targeted approach at looking at the pension and OPEB deferrals specifically. So again, the objective is seeking to assess the effects of the existing recognition approach on pension or OPEB expense. Said another way, by how much would pension or OPEB expense be different if the changes in the liability were not deferred and were recognized immediately? I would like to reiterate what this pre-agenda research is not, because it is narrow in scope and it is just looking at the effects on expense. So it's not intended to re-examine the conclusions reached in the post-employment benefit statements that changes meet the conceptual definition to be reported as deferred outflows or deferred inflows of resources. It's not intended to re-examine the conclusions reached about the information's benefits, including its usefulness and its ability to make assessments of interperiod equity. And it's not intended to further evaluate specific costs associated with reporting the deferrals under the existing approach. Potential outcomes of the proposed research are kind of twofold. So if the research finds minimal impacts to the amount of an entity's pension or OPEB expense such that the information about interperiod equity is not significantly affected, then a potential future consideration could be made by the board to establish a practical expedient to the existing recognition approach. On the other hand, if the research finds significant impacts, then consideration could be made by the board to undertake additional research. That type of additional research could include, but would not be limited to, the things that I articulated are not part of this research. So things looking at the specific costs associated with the existing recognition approach or the impacts of alternative recognition approaches to users about information regarding interperiod equity. As is required by our procedures, staff, section 4 of this proposal considers the staff assessment about group 1 information. And the staff believes that if a project were to be added related to this topic, the information that is expected to result from such a project would be limited to group 1 information. And I will pause here to pose the question about group 1 information. So does the board agree with the staff's assessment that research would be limited to group 1 information?
Thanks, Emily. Diane?
I have a question first. So you identified 3 different categories that are all rolled together in the deferrals. When you take a look at this, are you going to split all of those apart and look at each one individually so that if some would have minor impact, but maybe there's one that would have a major impact, that would be identified separately, or is it all lumped together in the deferrals?
I think that's something that we're hoping to refine in phase 1 when we develop the design, because I think that while obviously most precise to look at the components individually, the reality of that is that would require collection of significantly more data, probably data that's not publicly available. And so in phase 1, which we'll talk about a little bit more of the research design, I think that our intent is to see what comparisons can we make with what data. And then when we provide the board the update at the end of phase 1, it would be a discussion of, we can make these comparisons with this data and it would take this amount of time, or we can make these more, detailed comparisons with this data and that would take this amount of time, and sort of present to what that would lead us to in terms of potential outcomes. Because I think that there are a lot of various pieces to that. And it's going to be a decision of the board to determine the level of detail with respect to those pieces, informed by what we find in phase 1 in terms of what we can get without, specifically having someone give it to us, what we can find publicly available.
Board member responses to the question of group 1 or other questions? Chris?
In response to the question, I agree with the staff recommendation and assessment that it meets the group 1 not recognition, but it fits in the group 1, the project. Thank you.
Thanks, Chris. Carolyn?
I agree that the proposed research is limited to group 1 information.
Thanks, Carolyn. Jackie?
I also agree that it's limited to group 1 information and clearly meets the requirements for group 1 information.
Thanks, Jackie. Robert?
I agree with the staff recommendation.
Thanks, Robert. Diane?
I agree that it does meet all the requirements of group 1.
Thanks, Diane. Jeff?
I agree too.
Same for me.
Okay, great. So we'll move into section 5 of the paper, which is the staff recommendation. We are recommending that this research be conducted. We believe that it will inform the board of the effects of the pension and OPEB related deferrals. We believe that it's responsive to challenges that were identified in our PIR activities, and that we believe that it would be able to inform a potential future assessment, if any is to be made by the board, as to whether a practical expedient could be established or whether additional research should be conducted on the topic. The last section of the research proposal includes the research plan, timetable, and budget. So with respect to the research plan, again, this is narrow in scope. We are recommending a phased approach that starts with pensions that are administered through trusts that meet the specified criteria. So those are the pensions that are within the scope of Statement 68. Phase 1 of the research would be focused on developing the comprehensive research design, a little bit of what we just talked about in response to Diane's question. We would be looking at what the sample would be, what number of years of data do we need, the exact comparisons to make. It does involve determining the availability of information and how to collect and analyze it. And that affects directly the types of comparisons that can be achieved. For example, looking at those individual components versus the deferrals in a more aggregated manner. After phase 1, when the design is complete, phase 2 would consist of conducting that research specific to the Statement 68 pensions, and then the design and execution of research for pensions that are not administered through trusts that meet the criteria, so the Statement 73 pensions and OPEB under Statement 75 would be considered subsequent phases of the research and would be would begin at a later point as necessary and informed by the earlier phases. Any research beyond comparing various amounts and effects on pension or OPEB expense of the deferrals is outside the scope of this specific research, so that would not be included at any subsequent phases. That would be a separate research proposal at a future time. As far as a timetable for phase 1, we are proposing that that be conducted between January and November with an update provided to the board in December of this year. Timetables for subsequent phases would be informed by phase 1. So depending on, again, the comparisons that we are to make and the sample size and is the information available, do we have to collect it? So those subsequent phase timetables would be developed at a future point and informed by the phase 1 research. The phase 1 budget for staff time, we are proposing 2 project managers and a PTA staff the project, or staff phase 1 of the project with 45, 40, and 30% of time respectively over the next 6 months. And with that, that'll bring us to board discussion question 2. And of course, if you have any questions about the plan or any pieces, I'm happy to answer those. The question 2 is, does the board believe that the proposed pre-agenda research activity should be added to the technical plan as described?
Thanks, Emily. Diane?
Yes. This is a really important project, and I like the approach because it's fairly simple. I mean, it's a lot of data and it's going to be a lot of analysis, but it's a fairly simple approach. GASB kind of confirmed the importance in ranking it 6th in their list. And I think the approach that you're taking makes sense. And if we need to take it further, we can discuss it at that point.
Thanks, Diane. Robert?
Just first a question, although I support the moving ahead with this. On page 13, I should have asked this prior to the meeting, but in this second paragraph, it says the staff notes that a potential outcome of phase 2 is that the initial comparisons present significant differences in pension expense such that continuing this specific research in the context of 73 and 75 would not be necessary. I'm just trying to understand that statement.
I think what we're going for there is that if we do the research in phase 1 and 2 on the Statement 68 pensions and the difference is astronomical, then do we need to, such that the board wouldn't be considering a practical expedient? I think the staff's view is that we wouldn't need to do additional research on the non-trust pensions and OPEB.
Okay, that's what I thought it intended, getting to that narrow practical expedient.
Right.
Aspect. Okay, thank you.
Jackie?
I also strongly support this proposal. As you well know, this is narrower in scope than I really would have liked. I'm one of those people that would have liked to have gone whole hog on this, but I'll take what I can get. This is a good start, I think, at looking at this. I'm interested in how far we can drill down because in my own research, I've found that those different components that you're looking at in the 3 and the 2 breakout, they're very divergent and all over the place in the notes, widely different. So I'll be interested in seeing what you find.
Thanks, Jackie. Chris?
I also agree and with moving forward.
Thanks, Chris. Carolyn?
I agree to add this to the technical plan. It rated high amongst our GASAC members. And I believe there's going to be some really meaningful information as we proceed forward to a possible phase 2. So I agree with adding this.
Thanks, Carolyn. Jeff?
So on focusing on what we're doing here, I sort of focused on what this is not, right? So Emily sort of talked about what the paragraph, which is what I really focused on about what this is not, which is sort of a little unusual for what a research project that we do, right? So the way I think about it is, we talk about it's not conceptual. It's not about, should these things be deferrals or not? It's not about benefits of the decision that was made. It's not about costs, it's really just about effect. And so I view it as sort of, we have deferrals. We're not doing major surgery on deferrals. We're doing outpatient surgery on deferrals, right? We're doing a really narrow thing to look at this one standard and this couple of events to see like what this, and obviously I hear there are voices who want, more major surgery on deferrals, but that's not what this is about. But I think it's a worthy, given what we've heard in the PIR, I think it's a worthy thing to explore, worth the effort to figure out, like, is there something here where the information can be obtained easier or better, right? So because of that, I agree with the recommendation.
Thanks, Jeff. I appreciate the description of the objectives of the project and what it is and what it isn't. I agree wholeheartedly that this is not about evaluating whether these should be deferrals or not in concept. It is trying to get at cost. And I agree we should proceed with the pre-agenda research. I think this is us responding to what we heard in the PIRs. This is us responding to the GASAC, rating this high on their prioritization list, as a number of you have noted. I think it'll be interesting to see what you can find without going actually to governments to provide us with this information, because in my relatively limited thinking about what I'm used to seeing in disclosures, I don't know we can get anything that would get us to this, even at a whole, but maybe I'm not thinking about it correctly. So we'll see, but that's what the design is for, is to think about that more and look at what you can get. And I appreciate that we at least acknowledge that even when we get to the end of this might not be the end. Like, what do we do with this could be future looks at essentially other cost benefit parts of it, right? This is just kind of an initial effect on interperiod equity, and what's that? And how much would that change if we did something, if we did a practical expedient? But we might look at other things like, well, what is the actual, what is the cost of doing all this stuff? What's the other benefit? And I guess in particular, what sticks in my mind on the benefits side, even if the results of this show that would result in a pretty significant increase in the fluctuation of expenses and interperiod equity, I'm reminded of the triennial for 5-year, 6-year Matt Harvey GASAC member talking about, even as it exists as a user, he wanted us to break out pension and OPEB expense from actual expenses, because the fluctuations, even as they are so significant that he wants to understand all the other changes and then understand the pension and OPEB expense separately. So if we told him, you know what, that fluctuation is going to be even greater, he's like, great, I always wanted it broken out. I still want it broken out. I don't know that would change, but that's a later on kind of discussion. And that's why a little bit, this is the first step. This should be the first step, but we'll see what the next step, if there is a next step, will come from it. But there are lots of paths forward that we might pursue, none of which are questioning whether or not conceptually these are deferrals or any broader look at deferrals that some might want. But thank you. We look forward to the research. Why don't we take a break? Take a break before we go to the next paper. Let's take 15 minutes. It's right at 10 o'clock. That's pretty good timing. Just come back at 10:15. Okay, welcome back. We are continuing on with our papers within our tech plan discussion. Alan, lead us to the next part, please.
Thank you, sir. So the next topic on the agenda will be a pre-agenda research proposal related to digital assets, and Tammy will walk us through that paper.
Thanks, Alan. This proposal and linking it to the project just before the break, this one doesn't have anything to do with post-employment benefits. So at least we're switching gears a little bit.
That's why we took a break, Tammy.
We
Just
needed
shift mindsets.
a break. That's right. So, but it is a research proposal, but a very different research proposal than when you heard about for PEB deferred flows. This research proposal that we bring forward for your consideration would relate to digital assets, a topic that we've heard a lot about. It has been a monitoring activity for us since about 2021, and you did receive an update not too terribly long ago in December 2025 from Mary Beth and Zach Martin, who has launched as a PTA. And I would describe the monitoring efforts that we've had to date to fall into generally one of two categories. The first of those categories is to track legislation at the federal and the state level related to digital assets. And as we've tracked that legislation, the challenge in tracking it is that we have tracked not just enacted legislation, but also things that are proposed that may or may not survive and become a law. So there are four sort of categories of that legislation, whether proposed or enacted, that we have tracked that relate to, one, whether investments in digital assets are permitted, whether governments can create digital reserves like Bitcoin reserves, whether and how to apply information related to criminal forfeiture and seizure of digital assets. And then lastly, legislation around the use and for payment of taxes and fines with digital assets, usually through an intermediary. At that update in December, we provided you with some information related to the GENIUS Act, that is the Guiding and Establishing National Innovation for U.S. Stablecoins Act, quite a mouthful. And that legislation at the federal level dealt with stablecoins and the regulatory framework around it and ensuring safeguards. So we've been tracking legislation. That's been one part of the monitoring effort. And then I would say the other half of the monitoring effort has been evaluating on an ongoing basis information from the news and professional publications. And in some ways, we do that for a lot of things that aren't even officially monitoring projects, but here we do it in a more intentional, formal kind of way. And out of those news and professional publications, I'll highlight two things that have been discovered that were transactions that sort of relate to their research proposal. And that is, through that process of monitoring, we've identified one state that launched its own stablecoin, and I think we talked about that in December, and have also seen at least one example of conduit debt that is collateralized by Bitcoin. And so those bring up interesting questions for this project, this research proposal that you have before you. The other thing I would point out related to the news and professional publications is oftentimes in their research proposals, I probably wouldn't spend a lot of time in the footnotes, but I will highlight in the proposal, there are references in footnotes to two fantastic resources related to digital assets, one from the AICPA and the other from the American Bar Association that the team has used to get kind of a sense of the environment. They're great orienting kind of materials. So those are there in the footnotes if you'd like to take a look at those. So when I think about a research proposal and one like this one, I look at this project a little bit like I looked at the cyber project of trying to get a handle on understanding the environment. I will say that one difference between this project and that one is that in addition to disclosure, these research questions that we'll talk about that were in the proposal would address a wide range of financial reporting issues. And first, kind of thinking about needing to classify these digital assets in some way, put them in categories. And this has the potential to affect recognition, measurement, and disclosure. And so the scope of it would include potentially financial reporting issues kind of across the spectrum. So the five research questions that would support that evaluation include, number one, what are the types of digital assets and what transactions are governments engaged in that involve digital assets? Number two, how information about these assets is currently being reported and or disclosed. Number three, what information would users find useful related to digital assets? Number four, what do other standard setters have to say about digital assets, either through guidance that's existing or proposed? And then five, what our own literature would have to say, whether there's some applicability to some types of digital assets and related transactions. And I like to think of it like almost as a matrix of what are the different types of digital assets on one dimension, and then what are the transactions that a government could be involved in that involve those types of digital assets. And if we have some completeness sort of around that, that will allow us to kind of get at those research questions and ultimately evaluate and bring something forward to the board to consider whether we would do something from a standard setting perspective. We were not vague, but we definitely included some information about the methods. We wanted you to have the research questions included in the research proposal, but I think those research questions kind of give way to what the methods might be. So I'll just highlight what those are. We would expect to be involved and engaged in the literature, not just to understand what's going on in the environment, but to grow our own knowledge about these types of transactions. We would expect to be engaging with some archival data within this project, using financial reports of governments to evaluate to what extent they report and disclose information about digital assets, and to get an idea of a range that would sort of fill out or complete that matrix. And then we would anticipate that there would be outreach either in the form of interviews or surveys or both to preparers to get a sense of the range of transactions to populate that matrix, and to users to figure out what kinds of information they use or would use related to digital assets and the related transactions. So in the proposal, we included a timeline that is just over a year, culminating in September of 2027. Kara, if the board were to choose for us to pursue this research project, Kara would lead it, and she would have another project manager assisting her and a couple of postgraduate technical assistants or PTAs. And during that time period between now and September 2027, when we provide the final report to the board, we would expect to provide 2 interim updates to the board, one in October of this year and one in May of next year. And I'll just mention here that we've got a timeline that is a little bit more detailed about the types of things that we would expect to be involved in, so that you can see what kinds of things you potentially would be updated on at those 2 interim update periods. But certainly we'd update on anything that we'd completed if we're a little further along, update on anything that would be completed to date at that point. So those are the highlights from the research proposal. There are two questions, obviously, for you to consider here. The first of those is whether you believe, I'll just pose that question, does the board believe that the research would be limited to Group 1 information? And staff believes that it is.
Thanks, Tammy. Or question 1 here, board responses, Group 1 information? Question. Chris?
Thanks, Tammy. Based on the outline provided, I do agree that it's limited to Group 1.
Thanks, Chris. Jackie?
I also agree that it meets the requirements for Group 1 information and is limited to that, as proposed, as Chris points out, because this is one of those things that could clearly go beyond Group 1 if we let it. So as I see it outlined, it meets the Group 1 requirements.
Thanks, Jackie. Carolyn?
I agree with the recommendation that this does fall within Group 1 information.
Thanks, Carolyn. Robert?
I also agree that this would fall within Group 1 information as proposed.
Thanks, Robert. Diane?
I agree. Yeah, it is limited to Group 1 information.
Jeff?
Yeah, I would agree. I sort of think of it like Jackie, like what I know at this point, it's Group 1 information, right? What it could become beyond this point, we'll discuss later, but for now, I agree that it looks like it's Group 1.
I agree. This is Group 1. I believe broadly governments are transacting in types of digital assets. I think that makes understanding how to account for them when they're actually assets, some other questions. I think those result in users' common needs. They are result from economic events. They're relevant to reporting economic condition and financial activities of the government. So they should be economic or financial events in the basic financial statement. So it meets our criteria broadly. I do think that I'm going to say maybe what Jackie and Jeff said a little bit differently. I think there are things we could find in asking what governments are doing that may not meet our description of an asset, maybe these other things. And I would say those aren't the things we're trying to find. We just might happen upon them. And so it will be important on us, like Jeff kind of described, to keep them kind of out and focus on the things that are relevant to us and that we can put within our literature in Group 1. So I believe that's our objective. We just have to, this is a unique project. We have to be careful with it over time.
All right. So the second part of this is to evaluate whether to conduct the research. And so as I've outlined the 5 research questions and sort of the structure of it, I will say that this project does have that feel of a little bit of exploration too, of us learning. And so there will be things in the scoping, but in addressing the second board question, if there are thoughts or concerns about the questions, certainly would welcome those. But the second board question that I'll pose to you is, does the board believe that the proposed pre-agenda research activity should be added to the technical plan as described, leaving you some room to opine on what you think about the scope of the project?
Tammy, I have if it's a question or a comment. Maybe it's a question. I think the way, and I'm honing in on what information about digital assets would users want, which sounds like, I guess it's not limited to, but it sounds like disclosure, right? As I see the project, there's a lot we have to decide first that's going to inform whether disclosures already might exist, right? That maybe this is implementation guidance. In other words, are some of these things meet our description of an investment, or maybe a deposit, or an intangible asset? And we already have disclosure items about those things, but then maybe some of them are something else, or thought about others, or stable coins has their own unique project that's needed, and the types of transactions that are going on with that. You might ask users about, well, what do you want to know about that? It just feels like we have more work to do to hone the project in on what's happening before we could go out in my mind, before we could go out and ask users what they want to know about these kind of types of things, instead of asking them broadly, what do you want to know about digital assets? And I don't know if I'm thinking about that right, or like at what point, like when should we be asking this, and is research or maybe even standard setting the better time to do that?
Yeah, that's a great question. The way that we built it into the timeline, that would be the expectation to first, I don't see the point in asking users about what they use and their interest areas until we understand the landscape, because you do want the outreach to be effective and targeted in that way. I would want that matrix to be somewhat complete before we got to that point. The way that we talked about it in setting up the research proposal, that part, the user piece, the user outreach, was in sort of the back half for that reason, because we expected that we would need to have that sort of handle on it before we would know even what questions really to ask. The question of whether that doesn't belong there and that could be in standard setting is open. If that would better be deferred to a standard setting phase, if the board took that on, is open to. We hadn't contemplated that. We were seeing it as part of the research effort and being in the later part. Could be that it's something that is somewhat preliminary, that there's a small sort of targeted piece to users when we have a handle on the transactions and the types of digital assets that we're talking about. Could be that there is something small. Maybe there's an answer that is a hybrid answer to the suggestion that you've made, that maybe that is a problem for a different day.
Sounds like it's late enough in the process as planned that we can pivot based on where we are. There's things like if implementation guidance is a big part of this, because we believe existing standards apply to a lot of these things. I would hate to hold up the implementation guidance starting because we're waiting on user disclosure information about other things. I do think about if that's the case, for example, are these investments, we haven't really done a concept and review of deposit and investment disclosures yet. Like how would all that play in? Is this the right time? Is this the right time to think about that sort of thing? Or are we only focused on disclosures related to these unique things where we think standard setting is applicable, like when a government issues a stable coin, because we don't have guidance that addresses that. These are all those things sounds like you will contemplate them, but I think it's worth thinking about as a fork in the road at some point when you get there.
Yeah, that makes sense. We're certainly able to pivot depending on what we find. Because it is largely exploratory, we have to react to the evidence that we get and think about what makes sense in the second phase.
Thanks. Chris.
You did it again.
It's quick.
The quick whip around, you did it again. It didn't catch me as off guard this time.
Just the way Diane points. She's like, hey, and I'm like, whoa.
So I think this, like we're in a really exciting place with digital assets. And I think the questions are dead on. My only comment would be, as we talk about governments, to not limit ourselves to US. When I talk to my counterparts overseas, they're moving 10 times faster than we are, right? They're ahead, and they have to be to a certain extent because this is about like currency sovereignty, right? And when you think about it, you not being able as a government, for our government too, right? But they're connected, but you think about overseas and the ability to lose the ability to manage your government, inflationary measures, all those things that central banks do, because you no longer control the underlying assets that make your nation run, right? And so the things that they're considering and the steps that they're taking, they're a little ahead of the US. And so as we think about where our digital asset path might go in the next few years, we need to be looking overseas. The implications are different because the US dollar is, global, but it's the other side of the coin. So as we're looking at the things that they're doing, we can infer the different things that we might be doing to either counter or maybe some of the same things that we may have to do as a government. And then the representative disclosures that might come out of that as we think through what's happening overseas. So I would just encourage us. I know usually we're like, okay, but we're US, why would we ever look abroad? But in a situation like this, when we're talking about something that's so pervasive across the globe, we really need to have that understanding of what's happening over there so that it can better inform our research and where we choose to dive in over on this side.
And Chris, I think that, certainly we do, when we take what's the GASB doing, we take that, we are paying attention to that routinely as we, work on projects that they have guidance on, et cetera. And I think it's important. It's a worthy thing to look at. I would caution us to always infer that it's going to come here because the reasons those things are happening there may not ever manifest here. So we may not have all the same use cases. I wouldn't infer just because it's happening there, it will happen here, but it's at least worth paying attention to and thinking about.
And I just think overall it's coming. Like this is why you've been pushing digital. It's coming here, right? Like it's here. It's going to come in a greater wave because organizations want that flexibility. But maybe to your point, not all of the different component parts or issues or challenges or whatever it might be are going to flow through.
And I don't know where we'll end up. I have ideas, I have thoughts where this will end up. Because I do still feel like we're early on, I wonder if the standard setting might be targeted at first as opposed to a broad swath of trying to address everything that might happen in the future in one standard. It might be something we have to more standard set in increments like the FASB is doing, rather than try to develop something broadly that affects all of them. But I don't know. We'll see what we find and we'll contemplate it. But I don't know. It's an interesting evolving area that.
And
we'll
my point
react
was
to.
only meant to say, open our eyes to understand the landscape, not that we are meant to pull that stuff in right now and we need to
Gotcha.
develop standards, but just to understand.
Makes sense. Thank you. Jackie.
I support the proposal going forward. And in my comment, I'm going to take the Chris approach a little bit, because this is a research proposal and because digital assets are becoming more prevalent. And I think that it's going to move faster. It's taken a while, but I think it's going to move faster with governments. I'd also encourage us to look at what could be coming with digital assets, because by the time we get this done in a year, the landscape could have changed considerably. So talking to corporations that are developing or working in the development of digital assets, working with researchers who are looking at this in universities and what's happening in the cyber and crypto and digital asset space, to make a rounder picture of where do we want to focus and what makes sense for us to focus on right now, as opposed to maybe we delay it. But I agree with Chris, getting the big picture on this research area, because it is a little bit new and different for us. We may find it fits into everything we've got already, like ESG did to some extent, but until we look broadly and holistically at what all is out there and then start going, we can do this, this, and this. I think that this is a good opportunity to do that.
Carolyn.
I agree with adding this to the pre-agenda research activity. I hadn't initially thought about it the way that my colleagues have, but listening to their comments, I do believe that we need to look just beyond, the United States. And we're hearing a lot from our GASB members that, we're our government, they weren't doing this before, but now that they are. So I think it's a good time for us to take on this project. So I agree with adding it to the pre-agenda activity.
Thanks, Carolyn. Robert.
I also agree with adding it as a pre-agenda research activity. And the increasing prevalence and usage by governments. There's little alternative guidance from other standard setters. I don't know if we want to get ahead of the curve on this or drive parallel lanes with others, but I think it's time to do this. Getting to Joel's question, I mean, I don't know if the order of the questions was meant to be sequential, or dual track. I would agree, though, that if that was meant to be sequential, the user aspect, I think I would put down further on the list. But I think you're going to be going down the path with everything you're doing kind of sequentially until you get to that point where the actual interaction with users and having those questions more narrowly scoped is probably much better. Thank you.
Thanks, Robert. Diane.
I agree that this should be added to the pre-agenda research. I like the idea of the education and taking a broad approach. What Chris and Jackie and Robert have all said about that, I think that makes sense. And and then kind of sift through where is our role in all of this. So I think this is going to be a really interesting project and look forward to your research.
Thanks, Diane. Jeff.
So a couple of thoughts here. One, sort of compare and contrast, right? This project to me is like the opposite of the research project we just talked about. Like that one is narrow, narrow, narrow. And this one, as it relates to a subject, is broad, broad, broad. And I think intentionally so, because we got to get a lay of the land of what's happening here. The question for me was ripeness. I don't think at some point, I have no doubt that digital asset, something will be necessary. The question is when. And so judging from what's going on in the world, particularly in the private sector and some of which internationally, right, it strikes me that this is probably ripe enough that we should get a handle on it. You asked about questions to your research questions. One of the questions that isn't there, Robert mentioned it, but is prevalence. And I think that will be important because I think so far we've sort of heard a lot of governments start because they want to get involved in this, but they want to get involved in it easy, no risk. And that there may not be easy, no risk ways to get involved with this stuff. And so they tend to like make a lot of noise and then back down. And so we just got to find out, like, is there enough prevalence? Is there enough governments really serious about doing this kind of stuff that it would warrant, us to potentially have something to do? And then in thinking about Joel's comment about users, one of the things that I think to me is probably first and foremost is it seems to me like first and foremost is an accounting thing. Like, how should these assets be accounted for, right? And, users are going to probably say, well, however you guys think they should be, you guys are the experts. You guys tell me how they should be accounted for. And I think about like the FASB's project on our stable coins, cash equivalents. I don't know if you asked our users, are they? I don't know. You guys know what cash equivalents are. You tell me. But then there's a knock-on question which has come up on that side of like, well, should we disclose? Right now, cash equivalents. We never did it before, but now should we disclose it? And then it raises questions: are these things different? Why are you disclosing it? So these are all interesting questions, and how rapidly is this coming to our world? How and will we have to deal with it? These, I think, will be all appropriate things for us to consider. So I agree with the recommendation.
Thanks, Jeff. I agree with the recommendation as well. I think through our monitoring, number one, it's highest rated by GASB at the latest prioritization. And number two, we've seen, I agree with what Jeff said, and it's still relevant. How prevalent is it? But I would say earlier on in our monitoring, there was more of what you're describing. Now we're starting to see things actually happen and more things come to fruition, even beyond the bluster. So I feel like this is now, it's becoming more and more actually happening and less talk about it. And so it does feel like now is the right time to kind of proceed with our project, with our looking at it in a more in-depth way to decide where if standard settings warranted, and get more information on it. Then our monitoring is active, but it's not as detailed as our research. And that's why we have two different things. And it's time for this to move to that phase. So I look forward to it. Anything else from anybody on that one? All right.
Thank you for that, Tammy. We're going to talk about GAP-U now. We're going to talk about GAP-U now? Yep. Feel free, take your time because you're shifting gears. Thank you.
All right, great. So we get to shift gears. This is seeing how quickly we can all move between projects, how nimble we are. So this is kind of exciting. I think we're bringing back to you the first update on the gap utilization monitoring since it's been squarely in the monitoring category, because before that we had it as a research project that was something that wouldn't there was no path for it to result in a standard setting effort, but it was something we were trying to understand. And so we had a fulsome research effort that we completed late in 2024, early in 2025, that resulted in a full paper and also a condensed report that we put out there that was sort of a made for screens kind of report that somebody could flip through and understand what we had done in gap utilization if they wanted to consume it, but they didn't want the full paper. And so that project came with sort of the assurance that we would build it for you for replicability so that we could come back periodically and assess gap utilization, and that we wouldn't have the gap that we'd had between the 2008 research study to the one that was produced in late 2024. So this is that first update for you. The gap utilization research effort, as you might recall, had two objectives associated with it. The first of those was what the requirements were state by state for financial reporting for different types of government entities. And one of the things that I hear, and people are sometimes surprised by the degree to which governments do have choice, when you deal with people who aren't maybe necessarily as engaged with the government sector as the people in this room are. And so it's an interesting thing to evaluate those requirements sort of state by state. And we did that back in 2024, and we established what we called, it was a continuum of 5 buckets that we placed every state for every type of government entity into one of 5 buckets along a continuum, where if you could picture it, on the far left side was a non-gap requirement with no exceptions. We had a couple of examples of those, all the way over to on the far right-hand side in the 5th bucket, gap being fully required with no exceptions, and much more examples of those across the U.S. And then as you moved in from bucket 1 and bucket 5, then you got non-gap being required with exception. From the right, gap being required with exception. So you kind of got that. And then square in the middle was a no requirement category. And so there was a significant effort in that research project to get every state identified for the state itself, for the counties within it, for the municipalities, and for the special districts where we could find it, place them in those buckets to say where the gap requirement or financial reporting requirement landed. The second part of that project was somewhat reserved for those of us who like the data and the statistics piece of it. And the significance of it was that we then ran a regression model, did statistical analysis to be able to show definitively what the factors were that contribute to gap utilization when you happen to be in a state that for your government type didn't fully require gap without exception. And so we found in that second stage something that might not necessarily surprise folks, that the larger the government, the fact that they were filing reports with MSRB because of the type of debt that they issue, governments that were subject to filing with the Federal Audit Clearinghouse because they had a single audit, all of those governments were more likely to utilize gap. But the thing that was unique for us and differentiated us from the academic papers that were out there is that we use that continuum, that bucketization of the gap or the financial reporting requirements to identify where it might be more likely that governments would utilize gap. And as part of that process, we also collected information about when states had a regulatory framework, something else that was built out that governments could use besides gap. And as you might suspect, when there was an alternative framework that was built out by the state government, the governments in that state were less likely to use gap. And that was something new that the academics hadn't studied. And quite frankly, they might not have a reason to study it. We were in a unique position to be able to study this topic. And as part of that, in addition to the evidence that we had about what would lead a government to be more likely to utilize gap, it also allowed us to collect information about whether governments, when they had the option, whether they were using gap or not, because we needed it to drop that down into the model. And so what that allowed us to do, that we were all interested in, is to calculate a percentage of governments that utilize gap at least within our sample. And you might remember the percentage was somewhere in the neighborhood of 78 or 79% of the governments in our sample. And as is the case, anytime you do any sort of averaging like that, the ability to extrapolate beyond that sample depends on the similarity to the governments outside of that sample. So our sample was governments for which we could find financial statements that had an auditor report associated with it. So they tended to be sometimes larger governments. So we said when we issued that report, this is the percentage, but be careful, exercise caution in extrapolating that percentage outside of that sample setting, because it might not hold when you move down to smaller governments and different types of governments. That percentage was very comparable to academic studies over time from data from 10, 15, 20 years ago. That percentage wasn't all that different, even though the other academic studies that had evaluated this had used different ways of getting at gap utilization. Sometimes they asked governments through a survey. In one study, they looked at the state of Illinois repository, the warehouse there, and said if they use modified accrual in the governmental funds, then I'm going to assume that they utilize gap as a proxy for that. But however it was measured, it was similar to what we found in analyzing the auditor opinion letters for whether a government utilized gap. Now, the significance of that going forward for us and the replicability component to this is that because we were the first to sort of bucketize those state requirements for each type of government entity, it allows us periodically, as we have done here, to go back and look at those state requirements periodically to see if they have changed. Because if they have changed in one direction or another, they move up or down the continuum, we might expect to see a change in that gap utilization percentage. So what we have for you today, by way of an update as part of this replication, is two pieces. One is an evaluation of the state requirements, which Marissa is going to explain for you. And also a kind of fun and cool thing, I think, where we used a separate data set that is a little bit more recent, where Eniola is going to describe the changes in gap utilization in this large database as one way of sort of keeping our thumb on the pulse of what's happening to gap utilization kind of across the board. So with that, I'll let Marissa explain what we've been doing with the monitoring requirements.
Great, thank you, Tammy. So as part of this monitoring phase, we revisited the categorization based on state statutes that was completed in the original research study. And we reviewed the statutes, administrative codes, and published policies that supported the prior classifications to determine whether any of these requirements had changed. So this review covered states, counties, and municipalities for all 50 states, as well as special districts in the 30 states with uniform reporting requirements. And based on this monitoring work, we found that most reporting requirements remained unchanged in terms of our classifications in those 5 buckets, with 2 instances where updates were needed. So the first update was driven by a change in statute. So in one state, updated legislation introduced a revenue-based exception to an otherwise gap-required reporting framework for special districts. So we therefore updated the classification from gap-required to gap-required with exception. So you'll see this reflected with an arrow in the special districts table in attachment A, which we use to denote instances where a statutory change occurred. And the second update was not the result of a statutory change. Instead, it reflects a reassessment of where an existing unchanged statute should be categorized within our 5-bucket framework. So in this instance, we revised the classification from no requirement to gap required with exception to better reflect our judgment that is required in applying the framework. We also attempted to identify financial reporting requirements for special districts in the 20 states where uniform requirements could not be located in our original research. In many of those states, we were still unable to present definitive requirements, either because applicable statutes could not be readily identified, or because reporting requirements differ based on each type of special district within each state. And as reflected in the special districts table, these factors continue to limit how comprehensively special district requirements can be categorized. And finally, an important addition to this phase was the inclusion of school districts. So as shown in the school districts table, we found that gap is fully required for school districts in 30 states compared to 21 states for counties and 13 states for municipalities. And this result is consistent with what we would generally expect, given the nature of the school district's oversight and reporting structures. And now I'll turn it over to Eniola, who's going to walk through what we observed when we looked at gap utilization in practice.
Thank you, Marissa. So we conducted research on government's use of gap in practice using data from a proprietary source. We note that this data source does not collect data on special districts and it's subject to debt and population-based thresholds. So our sample included all 50 states, 1,376 counties, 2,514 municipalities, and 3,720 school districts over the years of 2022 to 2024. For analysis, we determined that a government utilized GAAP if its fund accounting basis was modified accrual and its government-wide accounting basis was accrual. All states with financial statements available use GAAP based on this proxy. Across other government types, approximately 86% of governments use GAAP each year from 2022 to 2024, which is higher than the prior research GAAP utilization rate of 78.8%, likely due to the larger size of these governments and their use of debt. Additionally, a limited number of counties, municipalities, and school districts move from GAAP to non-GAAP and vice versa over the periods examined. This represents one approach for evaluating whether GAAP utilization rates are changing, but it may not fully reflect GAAP utilization rates among smaller governments. Our monitoring efforts did not include an exhaustive review of legislative activity that would affect financial reporting requirements, but we identified 2 states with legislative developments that would impact GAAP utilization. In one state, legislation was passed that would impact counties, municipalities, consolidated city-county governments, and other political subdivisions of the state. The legislation adjusts population and expenditure thresholds used to determine the nature and frequency of financial reporting and audit requirements, thereby allowing a larger group of local governments to qualify for reporting frameworks that do not require full GAAP-based financial statements. The other state has proposed legislation that would establish a new uniform statutory framework for local government financial reporting requirements based on government size. We note that this state had changes in its GAAP utilization categorization between the GASB's 2008 and 2025 studies. In future monitoring efforts, we will continue to periodically reassess state statutes and their categorization, including for those 2 states I just talked about, and make additional efforts to identify the financial reporting requirements for the 20 states with non-uniform reporting requirements for their special districts. We will also identify special districts types by state and examine relevant actors to better assess their GAAP utilization rate.
Thanks to these 2 for their great work. We'll pause here if you've got questions or comments about the work that we're doing, and then tell you where we're headed.
Any questions or comments? Jeff?
I have a question, but first I want to thank the team, right? I think this is the type of research I think it's good to have. This is the monitoring I think is valuable for GASB overall, the board, the staff to keep a track on. At the end of the day, this is our product, and is our product being used? I think it's something for us to have a handle on, whether it's legislatively or in practice or whatever. So I applaud the team for preparing this. My question is on some of the proprietary data. So on page 6, you have a table that talks about how we got to the counts of the types of governments we got. And then we have less the entities with missing data. Now, I don't think, correct me if I'm wrong, because I know the data, you say it's if you have population under 10,000 in your special district, you are out. I don't think those numbers down in the table are those guys. Right? They're not the below 10,000s. They're not the special districts. They are the others. But I was sort of surprised by how big that number was. Right? And any ideas or sense of why that number is so large? Like, why is their data not available?
Yeah, so I think that database has financial statement information in it to a lesser extent than it has demographic information. So that database pulls in a lot of demographic information from the U.S. Census Bureau. And so I think a lot of those missing observations were governments that met their threshold for being in there for demographic data that they were able to collect, but it didn't meet the threshold for having the financial statement data included, is what I think that is.
Any other questions or comments for the team? Robert?
I just want to apologize that Wisconsin is one of the 2 states that doesn't have a requirement, but at least at least the state does prepare an act for in accordance with GAP.
Thanks, Robert. No other comments or observations, team?
Just that we're built for replicability. So now it's streamlined so that periodically when time permits, we can do these kinds of updates with you and let you know sort of where things are, and keeping track of the 2 that they mentioned that were in process, that legislation changing. We'll pick those up the next time around.
Thank you. And I would, this is not a request of the team or maybe anybody here in the room, but to the people listening, it's hard to keep up with state legislation that's, in process in particular. And I think that's of interest to us so that we can understand, educate if necessary. So if anybody's listening and knows about legislation in their state at any point in time, please do contact us, because it would help us facilitate our monitoring and help us understand what's going on. So I appreciate the efforts that you guys go through to do that, but that's hard to track. 50 legislatures, doing all sorts of things. We can't always find them all. So any help we can get from people that know about it would be appreciated. All right. Thanks, team. Appreciate the continued efforts. I echo Jeff's comments as well, that this is important, and appreciate the work.
Thank you, Tammy. Last topic on the table is to talk about an agenda request that we received, and you have a paper on that request, and Pauline's going to walk you through that and talk about it.
Thank you, Alan. Good morning, everyone. So as Alan noted, the staff received an agenda request to re-examine certain provisions of investments. As you have in the attachment, the stakeholder have proposed or have requested an exception for fair value measurement for a very specific set of circumstances. Those are mortgage-backed securities that are used as collateral to back up their debt, their revenue debt. And in the purposes of the analysis, as we noted in the paper, is very focused on a procedural analysis rather than a technical accounting analysis. In other words, the project staff's recommendations and opinions are not going to be based on whether an exception should be granted or not, is rather focused on whether the request meets the procedural requirements to be put in an agenda in the technical plan for the board's consideration of a reexamination. So as we noted in page 24 of the rules of procedure, essentially it describes that the consideration for the boards for reexamination projects is based in 2 very specific circumstances, and is that whether the supporting documentation requesting reexamination determines whether it was the topic was adequately considered in the development of existing standards, or whether there have been changes in the circumstances and the environment that warrants for the board to reconsider the issue. So those are the 2 broad parameters that would need to be considered. So as we put forward the analysis for the board's consideration, we started with what the stakeholder had identified the issue, which originated in Statement 31. We require the fair value measurement of the securities. In Statement 31, the board received several comment letters for housing finance authorities addressing the specific circumstance. The board considered the issue. The board rejected the request. And it can be viewed as a general to more narrow and specific set of circumstances. The board considered held to maturity as an exception to fair value. As you all know today, the fair value guidance that is current and effective requires broadly the measurement of fair value of investments with specific carve-outs for different methodologies like the equity method or amortized cost. But there are specific circumstances. And so the board considered broadly held to maturity. The board rejected held to maturity. The board considered housing authorities and rejected housing authorities as an exception. Then we move forward to the issue, and this happened in March of 1997. As I mentioned, there were comment letters for housing authorities. In February of 2015, the board issued a fair value measurement standard. In that standard, this issue about held to maturity was also raised. The board received 37 comment letters in the PV and 37 comment letters in the ED, consequentially the same number. No housing authority letters were received, but held to maturity was again an issue, was discussed and rejected by the board. In fact, there's a provision that was not annotated in the paper that it could be found in paragraph 76 of statement 72 that make it explicit that loans acquired or originated by a government that have been securitized should be measured at fair value. In other words, the project staff believes that the board has considered and rejected this specific fact pattern in at least two standards. In addition, the guidance has been effective since 1997, and we are not aware, and the stakeholder did not raise any specific facts or circumstances that led us to believe that there was changes in the environment. We're very empathetic about the issue. We understand the challenges and difficulties that have raised to this specific government. It affects housing authorities who hold MBSs as collateral to their debt. We understand the issue. Again, the staff's analysis and recommendation is not based on the technical issue, but rather on meeting the requirements of the rules of procedure to provide you an advice of whether this should be put in the agenda or not. Based on the analysis proposed, the project staff believes that this topic should not be added to the board technical plan, either as a potential topic for reexamination, a pre-agenda research effort, or a practice issue. And with that, I'm going to pose the only question in the paper. Does the board believe that this agenda request should be incorporated into the technical plan as either a potential topic, a pre-agenda research, or a practical or a practice issue project?
Thanks, Paulina. Board member responses to question, our only question here. Jeff?
I guess I'll start because I had a flashback when I was reading these materials. I was a housing bond analyst at the time that this hit, and so I'm sort of very familiar with the issues raised that were addressed. But at the end of the day, I come to the same conclusion as the staff for the reasons articulated by Paulina. This was a big deal at the time, but clearly, and I went back and looked at some of the comment letters at the time and had further flashbacks to the individuals providing the comment letters. But clearly, the board thought about it, contemplated those points of view, and came to the conclusion that they did. So I don't think it's the place now for us to go and revisit those decisions, only to consider, as you said, okay, they considered them. Is there any new information? Is there anything evolving here that's changed? And from my look at it, doesn't seem like that's the case, right? So we're dealing with an issue that was addressed. And it seems like there is ways that users can get the information that they want. There are voluntary disclosures. I, as an analyst, got the information that I needed to be able to perform my reviews. So I don't think there's a unfilled user need here, right? So, and then to open up the whole exception for a particular group as it relates to MBS could probably create more complexity or comparability issues than we would want to entertain. So for all of those reasons, I agree with the staff recommendation.
Thanks, Jeff. Robert?
I also concur with the staff recommendation for using the rationale that was outlined in the paper. I mean, it appears that similar situated entities are able to apply current GAAP for similar types of investments. And as Jeff noted, they have the ability to provide additional voluntary disclosure to facilitate any concerns that rating agencies or other stakeholders may have.
Thanks, Robert. Diane?
So like Jeff, I had flashbacks with the 10 years I was on the Housing Authority, because while I was on the board of the Housing Authority, we did make the change. Instead of backing the bonds with the actual loans, we changed to backing it with the MBS. And we did mark to market because we had clean opinions on our financial statements. So For one thing, I don't understand why they don't do that, but in this particular request, but I agree with staff. I don't think we want to reopen this. The board did take a look at this topic. They specifically addressed it, that they were not going to provide that exception. So I agree with the staff recommendation.
Thanks, Diane. Chris?
I also agree with the recommendation and for all the reasons mentioned in the paper. And I just like to point out that I appreciate the paper and being comprehensive and spelling out our, essentially our due process for evaluating these types of comments and requests, and the thoughtful nature that we have already designed in going through them, and how we took those steps in this case to check every box and prove out the staff's recommendation. So with that, I agree.
Thanks, Chris. Carolyn?
And I also agree with the staff recommendation based on the analysis that the staff did. And I also appreciate the effort and the due diligence that the staff took in preparing the paper and also responding to the stakeholders' request.
Thanks, Carolyn. Jackie?
I also agree with the staff on this one. Appreciate the information provided and the way it was laid out, since this is the first time I've ever seen one of these. So that was nice to have all the procedure in place and have it outlined for us. That was great. And I agree with what Jeff and Diane said. They've got the background in the housing experience in this area, and they too believe that we've addressed this. It's been looked at. There's no reason for an exception on this. So I support the staff recommendation.
Thanks, Jackie. I appreciate the request and the thoughtful request by the requester. But like Jackie, Diane and Jeff articulated well with a lot of experience, their consideration of this, and I agree with their conclusions as well.
I think that takes care of that topic. So obviously the main thing we have left to do is just to approve the second, third tech plan for 2026. But before I do that, I just think it's right to ask you, do you have any questions overall about the tech plan or any topics of things we haven't already discussed in relation to the papers?
Any board questions for the team on the tech plan overall that haven't been addressed in the papers? I don't see any, Alan.
Well, seeing that, Mr. Chair, if it's okay with you, we just ask for a vote to approve the tech plan.
Please proceed.
Jeff? I approve. Chris?
I do not approve.
Carolyn?
I approve.
Diane?
I approve.
Jackie?
I approve.
Robert?
I approve.
And Mr. Chairman?
I approve. And I think it's worth noting that 6 weeks-ish ago, the GASAC prioritized for us what they thought we should be working on. And I'll highlight, the result of that. Maybe the top 7 kind of stood out. There's the top 3 really stood out. And then the next 4, the top 3, the highest prioritized item was digital assets. We just moved that into pre-agenda research. The second was governmental fund financial statements. I continue to understand the issue. I agree it's important. I think we just need more time we just really tried to solve that issue before we start back with a clean slate. So I think in the future, this is something we'll address. I don't know that this year is the time we're going to start it. And the third was the financial reporting entity. And the team is working on a request to bring to the board at some time in the next couple of months, between now and at least by the next time we approve a tech plan for pre-agenda research in the financial reporting entity era. So I do believe at least we'll bring that to the board for consideration to move that onto the plan and respond to the GASAC. And then the next grouping was gap structure, which we are working on, right? Pre-agenda research. Fund balance, statement 54, that was kind of a new one on me. I think in the next GASAC meeting or 2, we might explore a little bit how much of that is fund balance is just important versus what are the actual issues and concerns with that one so that we can, appropriately understand the issue in order to be able to address it. Sixth was pension and OPEB, the effective deferrals, another one we just approved to put on pre-agenda research. And the seventh was use of technology in governments, which is on our active monitoring and something that I think is important to me and to us to continue to understand how technology is impacting governments and how they prepare and audit financial statements and what impact, if any, does that have on us. So I think we are monitoring that. So of the seven, we're addressing, well, I'd say 4, potentially 5, depending upon what we do with the reporting entity, and we'll continue to look at the other 2. So we are working to address the things our stakeholders are telling us are their highest priorities for us to be working on. And I appreciate that.
I think that takes care of the tech plan on the agenda, sir.
Excellent. Thanks, everybody. We were pretty efficient with our board meeting, at least so far, because that concludes all our kind of technical discussions. We do have one last piece of the board meeting, but that is a pre-scheduled liaison meeting with the AICPA State and Local Government Expert Panel that is scheduled for tomorrow morning at 10 a.m. And so we will adjourn the board meeting until then and pick it back up for just that liaison meeting from 10 until noon tomorrow morning. But otherwise, we are done and appreciate everybody's work.